Hello and welcome. I am so excited to introduce today's guest, my friend and mentor, Bill Allen. Bill is a multifaceted entrepreneur, real estate investor, retired Navy pilot, a mastermind coach, podcast host, speaker, author, and farmer. With a diverse range of interests and accomplishments, Bill has made a significant impact across a number of fields, from serving as a Navy test pilot to growing his first real estate investing business. Bill has since expanded his ventures to include multiple businesses, real estate investor education companies, coaching and consulting services for entrepreneurs, a small farm in Middle Tennessee, and more. Bill is passionate about solving problems, which has recently led to the development of an event hosting software platform and a new mastermind program focused on teaching entrepreneurship to young people called the Teenage Tycoon. Bill also loves to fly his airplane and spend time with his wife and 3 boys. Join us as Bill shares his insights into his journey, the lessons he's learned along the way, and his passion for empowering others to achieve success in business and real estate investing. Bill, thank you for joining us today.
What an intro. That was impressive. I definitely did not write that in a bio. So good job.
Yeah, thank you. I have definitely pulled things from a few places, but I think it's important for me, for my listeners, to really know like who I'm talking to. And you've done so many interesting things. And so I think that just really helps to kind of help them get to know you, because we can't possibly talk about all of that in the episode today. So at least they've got a general idea of like all the different things that you're doing and the interesting person that you are.
Well, I
So,
do think that I need to make one quick correction. You said
uh-oh.
farmer. And when I think about that, like I'm not actually the farmer. We have a guy who does the farming. I've killed everything I've ever planted in my entire life, including a cactus. And I'm learning right alongside of this guy that I hired,
Mhm.
like a consultant effectively. And so I look at myself as like the business and entrepreneur of the farm. So like farmers out there are great at what they do, but they can't market and sell their stuff. And that's kind of where I come in, is I can throw like a bunch of like rocket fuel on a good farmer's business. So although we do have a farm, we do a ton of stuff on there, I feel like my superpower is still in the marketing and sales and the promotion of it.
Love it. I've been to the farm. It's a pretty cool spot, and I love all the videos you post, like the baby goats and the little chicks, and it's definitely fun to watch as that grows.
Yeah, I create the craziness and then I have other people that help me deal with it. I think that happens kind of across the board.
Yeah, I think that is a good probably model. We could talk a little bit more here about entrepreneurship and how you make that work so that you can dabble in so many interesting things and have fun along the way. I know we were recently at an event together in Dallas, and you had been talking about the OODA loop, as
Yeah.
well as kind of how certain groups of people tend to find success in this business. And so I thought maybe a good place to start would be to have you share a little bit about your background in the military and how that has prepared you for success as a real estate investor and entrepreneur.
Yeah, for sure. I think as far as real estate goes, and anything that I feel like is kind of high risk, people see risk. And really ultimately I think it's equivalent to fear. So if people are like stuck or it takes them a long time to make a decision or these kind of things, it really all is decision making and that whole process. And so we talked about the OODA loop. I'll talk about it quickly. It's observe, orient, decide, and act. So OODA, observe. First O is observe. And in any decision that you ever make, you're just kind of taking in information. You're just observing things, what's going on. And then, I mean, you can take the most basic decision that you make all the time. And if it's something that you have experience with, then usually your decision is a lot faster. And if it's something that's new to you, it feels foreign, it's uncomfortable, that decision-making process may take a little longer. But you observe everything, you just take in information and observe. And then you orient yourself. So I look at this as like situation awareness. So how does your like current reality match what you think? So your situation awareness is very much built on your previous experiences, something in your life. Have you done this before? So, I mean, just imagine just like driving a car now. If you take, Tracy, you probably can drive a car. Let's see, drive a car, talk on the phone, and put on makeup at the same time. Is that true or not true?
I would say that's fair, except it's probably eat versus put on makeup. I don't put on makeup in my car, but I definitely
Okay.
can eat and talk on the phone and drive at the same time.
Okay.
Yeah.
And probably think about what you like, where you're going, what you have to do that day, lots of things. And you're just like naturally looking in the side mirrors, the rear view mirror, keeping the distance between you and the car in front of you. But when you were 15 and a half and you got your learner's permit and you were learning how to drive, you legitimately would have to remember to put on your seatbelt, adjust a mirror, get set up in situation, adjust the seat, and it would take you minutes to do some of this stuff.
Mhm.
And then like which pedal to press down, and the fact that you only had to use 1 foot, you're not supposed to use 2 feet. Like why would I have like 2 feet? I have 2 feet. I have one for the gas and one for the brake, right? And so in the beginning, it's very much just like learning those processes takes longer, and you don't have the situation awareness, you don't have the muscle memory, you don't have the comfort that you have now. And so now you can do a lot of that stuff in your sleep very easily without thinking about it. This is why you drive a car and you maybe take the wrong exit when you're on autopilot going to your house instead of somewhere else because you just drove by that exit. Just today, I drove right past the turn that I was supposed to take because I've never made the right turn on that road. My house is just a few more streets down. I came from a totally different direction and my whole brain was on autopilot to go to the place that I've gone to thousands of times in that direction on that road. Never made a right turn to go a different way out of my neighborhood ever until today. And I just went right past it. I was like, what just happened? I'm on autopilot, right? So that's the orientation of what you're used to. And then you have to make a decision and then you have to act. So OODA, observe, orient, decide, and act. So if you're doing something new like real estate investing, or like buying a house that cost $500,000, you see potential risk. Like I could lose $500,000 is what, and even if you're like listening to this and you're like, you know what, I don't feel that way. Like I know that I'm not going to lose $500,000. It's going to be a lot less if I try to flip this house or buy it as a rental, or there's a potential downside, right? But inherently, subconsciously, you're seeing risk most likely, especially if you're not used to risk, like a risk-based environment. So you asked me why the military set me up really well for this, because I had to make risk decisions every single day of my life in the military. Usually I'm flying a helicopter, an airplane. And when I was flying airplanes with students, like they wanted to crash into the ground every single day. Like they had no fear of death. It was unbelievable. I could not believe it. And I would have to take the controls. I'd have to stop us from dying on a somewhat regular basis. And then flying a helicopter, there's a lot of decisions that are made regularly that are going to affect the flight, the mission, our safety, all these things. And so my training was very much about thinking about the worst case scenario all the time and being able to mitigate the risk, but with the decisions that we make. So how do we set up? How do we prepare? How do we mitigate the risk and increase the upside? And so I believe that there are certain professions that are very high risk professions and they're trained for it. So you got doctors, lawyers, nurses, police officers, firefighters, military personnel, like folks like that are in a high risk environment on a regular basis in their profession, and their brains were wired and trained to think like this. And then you have the people who work an office job potentially their whole life. Maybe it's a teacher or just like a software engineer, an office manager, somebody like that who is just not used to high risk. They're not used to getting shot at, right? They're not used to defending somebody against life in prison. They're not used to saving somebody's life on an operating table. And so they don't think like that. And so that OODA loop is a good framework to use to figure out how we make decisions and understand that we're constantly observing. And then the orientation phase is the most important. Like how do we figure out how to increase our experience? The way that we do that is we have to go out there and like learn on the job, basically. We have to put ourselves in a risky environment in order to be more comfortable with risk. And so we can go as far as you want with that, but I think profession-wise, some of the people that I see pick things up the fastest is they are also potentially the most dangerous in business because they'll take a lot more risks, is somebody who's backed in a high-risk profession. But I think their brain is we have like hardware and software, right? The software that's installed in our brain is very much, I'm willing to make a decision when I'm not guaranteed the outcome. And I think the biggest thing that I can leave anybody with is this principle of something called operational risk management that we have, is only make risk decisions when the benefits outweigh the cost. So only make a risk decision, a high risk decision, when benefits outweigh the costs. And I would actually put the word greatly on that for anybody who's investing in real estate or putting their money at risk, is only make risk decisions when benefits greatly outweigh the cost. So the upside has to be so big that I'm able to mitigate the downside of it and make decisions along the way that happens. The way that we do that is through experience. So it's really important for us to figure out how we get that experience in a low risk environment.
Awesome. I think the one follow-up question I have for you with regard to that is I think some of us can sometimes kind of get stuck in I think you called it the learning loop, where it's like we just go from the O to the O and we keep learning and learning and learning, but like not actually taking the next step. Can you give any suggestions on for people who find themselves feeling stuck where they're not feeling comfortable enough to take that next step? What are some things that they can do to like proactively mitigate the risk, like you were talking about, to like get it to a point where it makes sense that they can actually start taking action, even if it's a small step?
Yeah, so before we even just go that deep, that learning loop, you observe something, you orient yourself, you get to a point where you're like, this doesn't compute. Like, I don't actually know how to do this. Everybody's saying to take massive action, but for some reason, I'm just going to go read another book, or I'm going to listen to another podcast, or I'm going to keep learning. Like, I need more knowledge and information. Like, typically, you probably have enough information to go take the first step. And so you want to understand the whole process before you'll even get started. And that's totally natural and normal. But if you think about it, you are going all the way through the OODA loop, okay? So you're observing, you're orienting yourself when you're like, I don't have the experience, I'm uncomfortable here. I'm actually not going to do anything. I'm going to go read another book to get some experience there. And that's how I'm going to get experience in my office reading a book, or in my car, at the gym, listening to a podcast. And that's your decision. Like, you decided not to do something. And then you acted on it by not doing something. And now you're taking in more information and observing. So you really are stuck in a learning loop that you're never going to get out of until you take the decision to actually go. Like, actually get out of the office, actually turn off the show and have a real world experience. Like, we have to have real world experiences to increase our experience bucket, right? And so you're making a decision. Indecision is a decision. It really is just, I'm not going to do it. And so that's exactly what I would call the learning loop. It's like a reverse, like, it's actually the opposite direction of where you need to go. It's completely like, it's horrible. It's destructive. And so what I think you need to do is be somebody who's going to go out there and get an experience. And the way that you do that is there's multiple ways. Number one, you could go take a job from somebody. You can actually like get paid to work with them and see, like, let them take some of the risk and you be involved in it and watch it and learn through experience. The other one is you could volunteer your time and your effort. Like, we talked about farming. I mean, think of the people come to my farm all the time and just like, hey, can I just come volunteer and learn while I'm there? And I'm like, that's totally valuable to me. It's $10 or $15 an hour to pay the people to come work there. If you want to come work for free, great. They get a ton of experience. They don't have to risk any of their money. They might ask me questions. And so you could go volunteer with somebody. You could get involved in a deal. So when I got started in apartments, I would just invest my money in the apartment. So I put some money in there, but I didn't have the risk of like the entire apartment. I had like a $25,000 or $50,000 limited partnership investment. So I could kind of watch and understand what they were doing and how they were doing it. And that would open the door for me to ask them questions. Like, I get access to somebody because I put $50,000 in a deal. Hey, tell me more about this. Let me ask you about this. Like, could I go see the property? Could we walk through? Like, I could, use that as well. So the other thing is figure out how you mitigate that risk. Like, go out there and do something that you put a house under contract and make some offers. I have a finance contingency. I have an inspection contingency. I have all these ways that I could get out of this contract if it doesn't work, where there's no money at risk. Actually, it's just a little bit of time, effort, and energy. There's lots of ways in and outside of real estate to figure out how you get involved by reducing the downside. Like, how do you offset the downside with a big upside potential? And so, I mean, if I've invested in other businesses that I've lost all my money, like I put money into a company, it was a startup. I knew that the upside was really big and I knew there was a downside, but if I put $25,000 in, my upside was like $500,000, my downside was 25K. And at the time I was like, you know what? I'm willing to risk that for the home run that this could be. And since then, I mean, I lost all that money. I've learned how to underwrite people, how to partner with the right people, how to do those kind of things. So the biggest piece of advice I would say is just get in the game, like figure out how to get in the game somehow. And that could be with somebody, with a partner, as a limited partner, just get a house under contract and go through the whole process, get bids, and then realize that, hey, the budget's not right. Numbers aren't going to work. Cancel the contract. that is a win. Most people see that as a loss. Like,
Mhm.
oh, I didn't get that house under contract. I didn't get that apartment building I was trying to buy. I didn't raise the whatever, you know? And that's not a loss. Like that's experience. You learned a ton from that. You're not going to do again.
Yeah, I love what you said there about the experience is the learning opportunity. And it's okay if you get to a certain point in the process and then realize that maybe it's not worth the risk anymore. And so you pull out, and that can still be a win, because I think sometimes we get so afraid to, quote unquote, make a mistake that we end up not doing anything, and then we don't learn. And so I'm sort of going through a similar process right now where I have a deal that I'm looking at, and I'm excited about the prospects of it, but it might not work out. Like I have to go through the process to figure that out. And so I'm excited for the opportunity to learn through it, even if it ends up not being a deal that we put under contract, and even if it ends up not materializing, I'm already learning a ton through the process. So I think that's a really valuable point.
Yeah, I was in church on Sunday. We've been talking about this digital fast of like getting off of our phones
Mhm.
and not getting stuck, in that world of being sucked in by the internet and the smartphone and all those things, and actually living your life with experiences. So, and they were talking about specifically this week that our kids right now, and probably, I mean, really like any Gen Z and down, right? Are the first group of kids that are going to die with more of other people's experiences than their own.
Mm,
And that hit me really hard. I was like, man, when I was a kid, we were going outside, we're creating experience, creating memories, creating things for ourselves. And now we're watching other people create memories and experiences. So when we're talking about this, like create a life of experience and getting out there, meeting people, serving folks, like those kind of things, that's what it is. Like reading the books nonstop, just sitting at home, like the nonstop learning loop is really challenging and damaging. You got to get out there, and if you want to see progress, you got to get out there and build an experience, go through whether it's and I don't encourage you to lose a lot of money or even try to break even, right? But all of this stuff, every experience we go through, every challenge that we're in is a potential learning process, and
mhm.
it allows us to build our experience box. And that second orientation phase is the most important piece of everything. If you can build that experience box up over time, you will see that people cannot take experience from you. They can't take that from you. Like that's information, knowledge, understanding, experience. That is the decision-making process. You go through that loop so much faster as you get more of those experiences. So it's so important to have those experiences. And I think that's something that like I really want to teach to our kids, my kids specifically, and many other kids out there. So that's so important. And it's lost these days because we can almost live a life on a computer or a phone now of we feel like we're getting those kind of experiences through other people's experience. So be the person that's creating the experience and going create the memories and building that, than like watching a bunch of other people do it.
Yeah, that's so good. Create a life of experience. I wrote that down. I don't know, add that to my vision board or something. That's good stuff right there.
Yeah.
Um, I wanted to talk a little bit more. You had mentioned how when you first got started with investing, you were doing limited partnerships first as a way to reduce risk. Can you talk a little bit more about kind of how you got into that initially and why it was a good fit for you?
Yeah, absolutely. So I was making pretty good money. So I was still flying full time. I was active duty. I was probably around $100,000 a year doing that, maybe a little bit more with some tax benefits. And then my real estate flipping business was doing well. I was making a couple hundred grand a year doing that on the side. And so I remember the year I had a really big tax burden. I had to write a check for like 150,000 to the IRS. And that was more money than I had ever made active duty in my entire life. Like, and I wasn't expecting it. It was, I kind of thought I would have to write a check, but I thought it was gonna be like 50 or 60K. It was 150. And I just vowed to never do that again. So I tried to figure out how I could offset my tax burden. And so that's what kind of prompted me to look at multifamily or apartments, or because I was buying single family houses, but I was getting depreciation from them, but not enough.
Hmm.
So then what I figured was I also wanted to grow my net worth. So I didn't want to buy a bunch more single family houses at that time. But I wanted to figure, because I was still a little active for me. Like I still felt it was a little bit active, and I wasn't getting the returns that I was really wanting to get, like cash on cash returns. And so what I did was I started investing in apartments as a passive investor. So a limited partner in apartments where I just put money in. So every time I'd make money, I'd take a distribution from my company, like 25 or 50,000. I would put it in an apartment building with somebody who was doing the active work for it. So they found it, they were fixing it up, they were managing it and running it, and then eventually selling it. And then I was getting quarterly dividends, and I was getting some K1 loss because they were bonus depreciation and doing cost segregation. So I'd get a K1 loss to offset some of my income. And as a real estate professional, I can offset all of my active income with passive losses, which was amazing. And then, and I didn't have to do anything. So that's kind of how I started. Was I started figuring out how I needed to look at that as an investment, and then who I should work with on that investment team. So I did probably the first year I did 3 of those. I think it was 20,000, 50K, and 75K. It was like 3 different investments. And then the second year I did 5 of them, I think. 5. So it was like 100K, 50K, 75K. It's just like every time I would make money, I would just put it in there. And then the cool thing was year 3, 2 or 3 of my first year investments paid off. So the one that I put in like 50K, I got back like 78,000. And so year 3, I was able to invest in like 4 with new money, and then like 3 with money
Rolling
from
that other
came back
money.
from the first year. Yeah.
Mhm.
It became like this giant pyramid where I see a lot of people invest just like one time now, and they're like,
Mhm.
oh, let me see how that does in like 5 or 7 years when it sells.
But it takes a
And
while to see those results. Yeah.
yeah, I mean, you're going to wait 5 or 7 years to see how that operator does.
Mhm.
And so what I did was I just vowed to find a really good operator, and then every single deal that they had, I'm just going to invest in it as much as I could. Like, and so I'm always broke. I'm like constantly broke. Right now, we have a deal going on right now. I got $200,000 to my name, and I'm putting it all in there. So I constantly just shove as much as I can. I call it burying money in my backyard. So that's just like the way I think about it. I make money, and then I go bury it in my backyard. And what I mean by that is I don't want to remember that I have it. Like if I make 50K or 100K in a month, then I just want to go put it in the backyard and just keep earning right now. Because I'm definitely at an earning time in my life where I'm fine making active income and living off of active income, not passive income right now. And then, so what I do is if I make 100K, I want to just bury it in a syndication, or whatever vehicle that you want to invest in, but
Mhm.
you got to invest it in something. Don't just let it sit in your bank account. And so I put it in there, and then there's a few things that it does. Number one, it goes and earns money and grows while I sleep. And the second one is I don't feel like I have that 100K anymore, so I go out and make another 100K.
Yeah. It's not available for you to spend. And so
Yeah.
if you want more money, you got to go make some more.
Yeah, so it
Yeah.
encourages me to not get comfortable, complacent, and lazy. Not that I really need that, but I would say I think everybody could use an extra 5 or 10% of that, like that boost.
Mhm.
And so I don't put myself in like financial ruin or like massive financial stress. However, I do try to make sure that I only have a few months of like operating living capital, and then put everything else in an investment. So that's kind of what I did in the beginning. Was number one is to offset the tax burden. But what I realized I was doing that other people weren't doing is I was growing my net worth while other people were trying to grow their active income.
Mm.
And so what most people do is just say, oh, I'm growing my business. And they take all the money and dump it back in to do like 2 or 3 times as much as they were doing before. And they never actually suck that money out to be their personal capital. Like, how do I take it out of the business, put it in my name, and then decide to do with it? So there's 3 things that I would say I do. One is invest in myself.
Mhm.
So how can I increase my skill set, my knowledge, my experience to be able to make more money so I'm more valuable personally? The second one is invest in my business. And then the third one is to invest in something like an apartment or a rental property or some passive income generating asset that's going to grow in value and kick off cash flow and all those things. So those are the 3 things that I'll do, actually in that order. And inside of that is I just evaluate what the return is on that cash. So right now I feel like I'm in enough masterminds. I know my focus. I know where I'm growing. I go to events still. And the second one is my business. If I could put $100,000 in my business, is it going to spit out, $400,000? Then that sounds great to me. Like if I could buy ads and produce 4x, 5x multiple on the money, then I'll put it there, but right now it very much is, I want to continue to invest in these passive net worth generating tax depreciable assets that are going to give me a big long-term return in something that I don't have to do any work for. So
Love it.
that's kind of, and the cool thing is when you bury money in your backyard, just like I did in the beginning, 2 years down the road, somebody calls me up and says, "Hey, what are your wiring instructions? I'm going to send, you gave me 50, I'm going to send you back 78." And I'm like, "Oh, dude, I totally forgot about that money." Yeah, here they are. And then I get it back, and you got a couple options then. You can put the 50 back in, or you can compound your net worth. And that's what I've been doing, is just massive compound growth of my net worth, and offset the new tax burden that creates, offset by getting another write-off.
So one of the things that you mentioned when you started kind of getting into this passive investing is you realized that you wanted to make sure that you were kind of mitigating the risks as much as you could as you got into it. And one of the ways that you did that was through like finding a really strong operator that you could partner with. Can you talk a little bit more about like what that process looked like for you? How did you initially do that? And then maybe how that has continued to build and like why you still work with the same people?
Yeah, exactly. Very, very good question. I think this is the most important thing. So everybody is looking at the deal, like, give me the numbers on the deal. Let me tell me how good it is. And as a limited partner and passive investor, there are hundreds of assumptions and input numbers that go into a lot of these calculations that you see. And you see a report of like 5 numbers. So you'll see like maybe average annual return. You'll see an IRR. Maybe you'll see a length of hold time. You'll see how soon your money is going to double, or the multiple on your money that you're going to get back, and a couple of those things. And then you can go deeper into the calculations of like exit cap rate, entry cap rate, all that stuff. But in the beginning, that's kind of what I was chasing in the beginning, were returns. So I told you I invested with somebody. I put $25,000 in for this huge upside, and they're selling the upside. And there's all these assumptions that were happening. And it was a referral from a friend of mine. So somebody else knew this person. I got on one call with them, and they seemed credible. So I was like, "Oh, okay, I'll put $25,000 of my retirement money in here." And I've done that a few times. And fortunately, I lost that money before I started investing in these multifamily deals. And so then that's when I realized that I need to look at the person more than the project in the beginning. Like, that's step one. And so who am I working with? Because these are the people that I'm going to be working with for the next 7 to 10 years or more, or at least 5 years, to make this return, right? And so once I hand my money over, there's years and years and years of work that happens. Whereas most people, I think there's a lot of people that are just like, let me get the deal funded. Let me get it closed. Yes, we bought an apartment. Like, well, now the real work starts.
Yeah.
And so I want to find somebody who's really good at the real work, at actually turning the properties and trustworthy. So fortunately for me, my partners, Jason and Pili Yarusi, they were in a mastermind. They were in 7-figure flipping with me, and they went off to do multifamily. And there's something about them. I was working with them. I was their coach for a while, and I just could trust them. Like, I really could trust them. And I said, "You know what? I know you guys are newer to this business, but I feel like," and they had a track record of success in other businesses, a track record of success, pretty much everything that they did. And their dedication and commitment to things, and Jason's just full on like bulldog style business. And I knew that he would not lose. And so I realized that I'm betting on that horse more than I am the apartments. And they had been studying it and learning it and understanding how to underwrite those things for a long time. And so I said, okay, you know what? I'm going to invest with them. And I invested with a couple other people in the beginning. I invested $100,000 in a 3-building deal down in Jacksonville. I invested in a couple other buildings around, but I knew Jason and Pili well. Like, I knew them. Like, I knew their heart. I knew their integrity. I knew a lot of that stuff from them. We'd never done a lot of like financial business before, but I didn't think that would change who they were. And so every time they brought me a project, I invested in a couple others, but honestly, I stopped investing in the others within a year of investing with them, just because of the level of communications that I was getting, the openness, the questions that I would ask, I would get an answer right away. The documents were coming on time. Like, those kind of things were happening. It was just very professional, and I really enjoyed that. And they were constantly like just telling the story about what they were doing on the property. It was very open book. And so I liked that, and I just had confidence. And this is before they had a track record. Like they had a track record in single family houses and a few like multifamily, like 4 units, and then alcohol business. Like they were doing, had a brewery and selling beer, and they were Jason's family also had a house moving business that he took over. Just the level of like commitment and dedication to everything was there for me. So it was character, it was integrity, and then I started to understand how to underwrite the deals, because honestly, in the beginning, I was very much just like, look, I believe in you guys, and this deal looks good on paper. So I'm not going to dig into that much further. Like I'll look at basic returns, what some of your assumptions are. What are you guys thinking you're going to do with the property? Why do you like the market? Basic stuff that I think is fine that a limited partner does. I don't think you need to know every single number on the spreadsheet, but you need to understand some of the assumptions. Ask the question of, hey, what's like worst case scenario here? Where do you see this going if this turns or this happens? And then what is Jason and his team going to do if that happens? Like, what is my confidence in them if things go wrong? I shouldn't say even if, when things go wrong, because something's going to go wrong for sure. And so what are they going to do and how are they going to handle it? And because I'm basically betting on his decision-making process. I'm betting on the fact that he can go through the OODA loop really well, because he's going to be the one who makes the final decision on that property, not me. He's the general partner. I'm the limited partner. And so and then how much does he believe in his people, the money that, like, what kind of dedication does he have to all of his partners? And so that turned out really, really well for me. I had this, gut instinct that they would be great partners, and started working with him as a limited partner for like 3 years. And now we've been working together on the general partner side for probably another 3 or 4 years. So that was it for me in the beginning. I really think it's important for you to know the people that you're working with.
So you mentioned there that like it's not a matter of if, but when things are going to go wrong. Can you share maybe a story of something that you guys have dealt with as you've been working together that was a challenge? Maybe, either unexpected shift in the market or just business plan, hitting a hurdle, and like how did that happen, and like how did you guys handle it?
Yeah, absolutely. I actually have 2 that are going on right now. Like we're in the middle of it right now. So one is we bought a property downtown Nashville. It's kind of right by the soccer stadium, and amazing property, incredible. Is going to be one of our best investments long term, I believe, because of the location. Like you cannot build a project in that area. That whole area is changing. They're building new buildings there. And we knew that they were building new construction there. They're building mixed use commercial, they're building residential, they're building apartments in that area, and that's only increasing the value of our property. And we're 2 years into our business plan. And the challenge that we never saw coming was, we knew these properties were going to come on the market, and we knew about when they would, but we didn't know that 4 brand new buildings, so 4 brand new apartments were going to come on market at the same time, right when we were starting to, like, we were fixing up the units to turn them over, right, and increase the rents. So 4 new buildings coming on at the same time. And the way this works is, we buy the property, we start fixing it up, we bring in these passive investors, and they're expecting a dividend, like a payout at some point on a quarterly basis is how we structure our payments. And so they're expecting something between 9 and 12 months, right? So we're turning these units, and inside the first year, we're expecting to get to a point where we can start distributing on the project. And so investors are like, hey, where's our distributions? Right around that 9 to 12 months. And what happened is, right about that 1 year point, we have 4 brand new buildings come on the market, and they're giving away like 3 or 4 months of free rent to fill
Lots of concessions to fill them up. So you're yeah.
Their rent is twice as expensive as ours. So we're still in the blue collar, but these people who are renting it are renter mentality people who are like, 4 months free rent. Like, I'll take it. This is a brand new building, class A apartment, like really nice, but it's like over $2,000 a month. So in a few months, when they can't pay their rent, they're going to get evicted from that building and have to try to come into ours. But what it did was the absorption rate just wouldn't handle. And honestly, we weren't incentivized. They weren't incentivized to jump into ours. So we were seeing a little bit longer vacancy than we originally planned, which cost us money, obviously. So that's something that we never thought about. In our business plan, we thought about the fact that new projects would come up, But when we looked at absorption, we thought that's fine. Like those are going to fill up and we won't have a ton of vacancy. We'll still be able to fill ours. But pretty much everybody was like running towards that stuff. And so it delayed distributions for a bit because we had a little bit longer vacancy. So that's something that, like when we ran the business, it's just not something we'd ever encountered, have ever thought about. I mean, looking back, it's like, oh yeah, that makes sense. But I didn't think they were going to give away 4 months free rent.
Right. Yeah.
Because they just want to fill their buildings. They could care less in the beginning. The stupid institutional money, they don't care about how much they lose in the first year, and so they're like REITs that own it and things like that. So it's just something that now we learned it, right? It's in our Orient phase. And so now next time we can say, hey, could this happen? What if this happened?
Yeah.
And so now we're buying in a different area in Murfreesboro, Tennessee, that cannot do that because there's a moratorium on building because the sewer capacity can't handle it. So people can't build all these buildings at the same time and bring everything online. So we're in an area now specifically focused there where we know that that can't happen. And so we made a little shift. So that's one thing. The other one is we had a building just north of Nashville that was a 20 unit motel that we were turning into a short-term rental property. So we had this plan to turn it. So when, 2.5 years ago that we bought it, started renovating it, renovated the building, spent a little bit more on renovations because we had a bunch of theft problems in the area, all that stuff. And we're just like waiting for that area to shift and change. And it will, and it already is. But we were going to do all short-term tenants there. And what happened was the banks were really fine with refinancing. So we had bridge debt on that property. And the banks were going to refinance us. We had that in a storage unit combined to refinance together from the bank. And shortly before closing, the bank just decided, and this was around the time that the rates changed and all that stuff was happening. They just were like, you know what? We don't have appetite for short-term rental building anymore. We're just going to carve that out and we'll finance the storage unit project that you have. And we're like, oh crap. And then they went from a 75 LTV to a 65% LTV. So next thing you know, we're closing this building and so we're trying to refinance out of it. We're getting charged $10,000, $20,000 a month in extensions on bridge debt. And we're getting into the situation where people are talking about right now. A lot of people are in this situation. And so we didn't know that short-term lending was going to dry up. We didn't know that we wouldn't have stable short-term lending. We didn't know that the short-term tenants wouldn't love the property, be in there on a regular basis. And so what we did was we had to pivot from our business plan to rent out the building on long-term leases now, get that stabilized on long-term leasing, and then go back for debt, which we did. But we had to bring $500,000 on a cash-in refinance on that property. So what a lot of people would be doing is going to do a capital call from their investors, and then potentially if they can't make the capital call, then water down their equity and have those conversations. We were fortunate enough to be in a situation where all three of the partners that were in that deal could bring money to the table, and we put the money in. And I probably own close to 50% of that building because I put a lot of my limited partner money in there. So I have a lot of cash in there, and I have my general partnership shares. So those are two like very open and honest buildings that we have that are going through that right now. So
yeah, I appreciate you.
This is out of like 16 exits in the last few years, and we probably have 10 or 12 other projects.
Yeah, I really appreciate you sharing that. I think it's important to understand that like not every deal is going to go perfectly, but like you said, we learn through the process so that we won't make that same, assumption next time, right? Like now we look for more things than we were looking for before. And I think it's important too that like you all had the, you were in the fortunate position to be able to avoid a capital call. But in those situations, you're communicating with your investors, you're letting them know what's going on and, working with them to make sure that they know what to expect. And, like with the first example you gave, the distributions had to be delayed, like having that open communication and not trying to like hide it or make up some excuse as to why it's happening, but just be transparent and like, this is what's happening. This is what we're doing about it. This is what you can expect. And I think that really builds a lot of trust for future potential partnerships as well.
Yeah, absolutely. There's a ton of other things that we could talk about too. I mean, I have so many examples of this, but you just want somebody that's going to be able to handle these problems and issues the right way. And then, like you said, just be direct and communicate it to the folks. And yeah, we try to do that as best as possible. And it's a very open book. So if you have a question and you're an investor, just give us a call, send us an email, like whatever it is, like we're there and we'll answer the questions. You can come to see the property. They're not hiding anything. That's what I saw in a couple of the other investments that I had, is it was very much like, it was obvious they weren't going well, but nobody was updating anything. It was like
Mm.
silence, crickets and things like that. And I was just like, man, it's very clear that this project is not going as planned, but just tell me what's going on. What are you doing about it? What are my options? All that stuff. And I didn't get a dividend on one of them for 3 years. And then the return afterwards was basically, fortunately, they sold it at the right time. And it was a little bit of return on the money. But I was like, I'm never investing with this group again.
Um, One of the things that you mentioned in there as you were talking about Nashville is, you know, that there's a lot of uncertainty in the market right now and that things are kind of shifting, under our feet. And so I would like to hear from you just sort of what are you doing? How are you positioning yourself in the current market to continue to be able to make investments and do deals, and what that looks like right now.
Well, I think we've really like adjusted our buy box down to an area that we really love, that we know really well, and we have become a really great buyer there. So I mentioned Murfreesboro, Tennessee. That's the area where we're focused, and we're great buyers there. We have a great property manager. We have a great team. All of our buildings, there's law of scales there, and so we're positioning ourselves to be buyers in this market, for people that could be getting into distressed situations. So we have a
Mm,
couple folks that we're buying from right now. We just closed 2 great properties. We have another one coming up. And really, the big thing there is just like if somebody needs an exit. So like one example is a couple of the buildings that we bought recently. There was a group that bought multiple projects during a couple years ago. And they're in a situation, same thing, where they would have to do a cash in refinance, but they had equity in buildings in Murfreesboro. So they were willing to sell those for a discount. They pull the equity out to be able to pay off the other buildings that they have that they wanted to hold longer. And so instead of asking investors for capital calls, they were able to like kind of call some of the herd and
hmm
sell off some of the buildings at a discount where we could buy at a great price for us and then pay off their investors. So we're just positioning ourselves in an area to be able to close these properties, to be somebody who you can trust to put your money with, because that's a challenge. A lot of people are not investing money right now because, like you said, they're uncertain. I have no uncertainty about the real estate market. I'm 100% certain that people will be continuing to rent. And if we
hmm
do have problems in the market, in the economy, more people will continue to rent. And we're not in the class A, like really expensive luxury market. We're in a working class blue collar market that will always have a need for housing. And so positioning ourselves there, being ready to buy, being great capital partners. When somebody's ready to invest, they trust us, they know, like, and trust us, and they're willing to put their money with us because they know they're not getting that in the market. They're not getting it anywhere else. Banks are untrustworthy right now. They're going out of business. Like anywhere else, like we have a real asset, tangible asset that you can invest in right now that gives you amazing returns. Like our property right now is projected to do an average annual return of 18.25%. 18.25% average annual return projected, right? That's our projected finances. However, like this is a real asset. It's a tangible asset. It's not a Bitcoin. It's not money in a bank. It's not some stock that who knows what the CEO is going to do next week to tank it. Who knows what somebody's going to say on CNBC. This is like real property. And so I love that about this asset class. That's why I'm still there.
Yeah, I think that that ties in really well with one of the things that one of my recent guests said, Brandon Cobb. He was talking about like when you're looking for recession-proof or recession-resistant assets to invest in, like follow the money and look at where money is going. And a market like Murfreesboro, that's a suburb of Nashville, where a lot of working class people are getting priced out of Nashville and they're having to move down there. And then the fact that they can't build new builds. And so there's a lot of industry and things coming in, and people need a place to live. The opportunity to be able to continue to kind of grow the number of units that are available in Murfreesboro at an affordable price and partnering with existing property management and all of that. Like it really makes sense. And so I think it's a really smart play and, excited to be able to kind of be a part of that with you guys and really excited about the opportunity that portfolio brings for a lot of people.
Yeah, it's a great spot. I mean, I love it there, and we'll have the cool thing is as you plus up your kind of inventory in one area, you become a really great seller for big money, like bigger institutional type money that they're the ones paying these crazy prices for this stuff because they don't need the big margins. And if you can roll everything up and sell it, I mean, I'm excited to achieve like really high, much. I always want to over deliver, right?
Yeah.
Under
Under
promise and over
promise, over
deliver.
deliver. Exactly.
Yeah. So
Yeah.
I'm really excited to produce like big returns because I'm one of the investors too. Like I invest in every single one of our deals. My money's in there with everyone else's. And I try to buy as much equity in every deal that we have as I can. If I was making $10 million a year, I wouldn't even be raising any money. I'd be putting all my
Just put
money
all your
into
own.
these.
Yeah.
Oh, I would own the whole thing. Like I'd love to have Jason and Chad running the show and me be the only investor that we need. I'll be there one day.
Yes. So along those lines, we're coming close to wrap up time here, but I want to talk about one more thing, and that is the Teenage Tycoon
Yeah.
entrepreneurship mastermind. So can you tell us a little bit, like how did that come into play?
Well, we were doing these conferences and these kids started showing up, in the conferences. And our conferences are very much, there's a faith-based element. There's not a lot of bad language. It's really just very family-friendly type environment. And kids started showing up. It was really Riley Eccles. She would trigger this in like 2016, probably 2017. I had no idea what was going to happen. But she started coming to the event with her dad, and they were doing like a YouTube channel together, and she was probably like, I don't know, 12 at the time or something, probably 12 or 13. And they're like a divorced family. So her mom and dad are divorced, and that's the time that her dad would spend together with her was
Mhm.
at the houses. He was, buying houses and buying rentals. And it was just really cool to see this. And then a couple more families started bringing their kids to the event. And then next thing you know, these kids started doing some deals with their parents. Like they actually would like find a deal, negotiate it, and the parents were teaching the kids like they were learning from the conference.
Mhm.
And then I had them speak on stage at the conference. So I had Riley and her dad come up and talk at the conference a couple years ago. And then the next year, there was some kids that were like doing deals, like a 12-year-old that did his first deal with a little bit of help from his dad and bought a rental and fixed it up and rented it out. And so then him and his dad came up and spoke on stage. And then there was another girl who was like 16 and did like 3 deals. So she told her story about these deals, Sophia Mendez. And it just kind of started snowballing. And I was like,
Mhm.
whoa, there's something here. Like these young people are hungry for this. They're not just watching TV. They're not just on YouTube. They're not just like, and this stuff's not getting taught in the schools. There's like
Yeah.
finance. So I have this huge heart for the kids, for the families. And honestly, behind the scenes, we're working on a TV show right now called Kids Who Flip. So we are working on that show. We're developing the whole project. And it's a huge dream of ours to film that show. So we're going to be like going out to figure out how to get sponsors. We got to pay for it ahead of time. It's millions of dollars to film this thing. It's not easy to get a show launched. And at that same time, like Ryan Whitefield, who's a partner on the
Mhm.
show, he was building and designing the show while I was like having this idea for this book I wanted to write for kids called Teenage Tycoon. And then that book turned into, well, what if we did a program for them where
Mhm.
just have our members come in and then we, offer it up to other families where we can teach them about money, finances, business, entrepreneurship, and real estate. And then because this is stuff that's just not taught in schools, it just isn't, and
Yeah.
it never will be the correct way. So we built that and launched it in January, and we have about 50 families that are in there right now. It's incredible to watch. I think there should be thousands in there. And every Thursday night at 7 p.m. Central, I get to get on a call with the kids, and it's just so amazing. It's like my favorite thing to do. And I get to bring in, so the other thing is everybody that I talk to about this is like, we need that. And my friends and colleagues and people that I know in the marketing world, in the sales world, and real estate world are like, if I can serve you, I will. And so they're volunteering to come on Thursday night. So every 2 weeks we have like an incredible mentor. Like next week, so I do this Thursday. The week after that is Nick Santanastasso. He's going to come talk to the kids. He's
So
a
good.
public speaker, amazing, incredible speaker. Toured with Tony Robbins. And then 2 weeks after that, I got Russell Brunson, who runs ClickFunnels. He's coming to talk to the kids. And who knows after that? Like, I have just a laundry list of people that want to come serve them. And then we're doing a book club where we're reading like real books. Like, we read The Millionaire Next Door last, and now we're reading The Go-Giver right now. And the kids are reading it. They're coming to a book club. And then I filmed a bunch of financial education courses for them. So they have video courses and trainings. And then we're going to do 2 live events. We'll do a live event in the summer in June this year, and we do another event in the winter at my office. So the kids get live events, they get virtual training, they get a video course, all this stuff. And we just want to serve them as much as we can.
Yeah, it's pretty awesome. I've had the opportunity to sit in on a few of the calls. My kids are a little on the young age to really benefit from the program, but it's such good content, and it's really inspiring to see some of the things that the kids are doing and some of their takeaways from some of the guests that you've had. And I wish my kids were a little bit older. I'm excited for them to get to the point where like they can really take it in. But I mean, even at 5, there's a few things that Layla has done where, we went around the house and we found some things that we could sell, and, bought some stuff for cheap and sold it for a little bit more on Facebook Marketplace, and just like starting to build those little concepts in where they can kind of really start to understand like what is money and how does it work, and the whole concept of like saving versus giving versus investing, and not just to spend every dollar that you get. And it's definitely really exciting and inspiring. I wonder if you could share maybe one key lesson that you've learned since you started the program from some of the kids.
I've learned that kids are faster movers than adults. So like kids, they don't see risk, pain, problem, all that stuff. And so you're carrying around so much baggage as an adult from all these like wounds that you have. The kids don't have it. It's just a totally fresh world. Like, they're like, I'm like, oh, go. They see a mentor call where somebody's like, oh, I use this website and I buy these things and then I go sell them on this other site. And they just go do it.
Yeah.
They're like, okay, do it. And then it's like, hey, this isn't working. How should I adjust? And so they're just faster movers. And honestly, they're sponges. Like, they're so open and willing to learn and ask questions. The questions they're asking are amazing, like absolutely fantastic. And they're just not afraid to be wrong. Like, they have their self-esteem is so high.
Yeah. There's no filter.
Completely. But really, it's about like, there's no filter in their mind of what's possible.
Yeah.
They don't know that they can't do stuff. And so I think we can learn a lot.
That's awesome. Well, we'll wrap things up on that note. I really appreciate you sharing your time with us today, and your insights on how to use real estate as a tool to build wealth and achieve financial freedom. What is the best way for our listeners to connect with you if they want to keep following your journey?
Yeah, I would say I have a podcast called 7-Figure Flipping. You can check out that. And then if you're on social media, you can find me on Instagram, on Facebook, on TikTok, on YouTube. Pretty much everywhere it's at Bill Allen REI. Bill Allen REI.
Awesome. Thank you again, Bill, for joining us and sharing your wisdom with us today. We'll provide links for all of those in the show notes as well. And thank you to our wonderful listeners for tuning into this episode and being a part of this community. If you found value in this episode, please hit the subscribe button and leave us a review. Until next time, remember that your path to financial freedom and the life of your dreams might be closer than you think. Take that first step and explore your possibilities. Stay tuned for more inspiring episodes, and thank you again for listening.